And we're live. Welcome back to the Better Than Bitcoin podcast, where I talk about the future of money. I'm your host, Jamie Dabaskis. This week has been an interesting week for Bitcoin, as always, so let's talk about it. For a little market recap, I am bullish in the immediate term and long term, but slightly bearish in the micro or short term. In the last episode of the podcast, I looked closer into the United States coronavirus economic stimulus bill and related it to Bitcoin. I took a look at the long-term Elliott wave chart on Bitcoin and zoomed in a bit to try to make sense of the confusing price action. Since then, things have been seen to be going well for Bitcoin. But before I go over the technical analysis side of Bitcoin, let's first take a look at the fundamental analysis for this week. So let's first take a look at the Fear and Greed Index for Bitcoin. Let me pull this up. What I have here. So generally speaking, if a majority of investors are fearful, hold on. This is a useful sentiment indicator to show how fearful and greedy investors are. So generally speaking, if a majority of investors are fearful in extreme fear, it is a potential buying opportunity. If a majority of investors are on the green side or greedy and prices reaching new local highs or new all-time highs, then it's generally about time for a correction. So as you can see here, they have a historical data. This is for a year, I think. Yeah, this is a year's worth of fear and greed indexes. And as you can see right here, where it's really high, up 95, June 26, 2019. If I go out to the daily chart, June 26, 2019 was the exact day where it topped right here at 14K. If the rest of my chart would load. The exact top right there, June 26th. So as you can tell, when it gets in the extreme zones, like in the upper 90s or the lower 10s, it's usually a bottom indicator or a top indicator. So right now we've been trending along lines of 8 to 12, back down to 8, back up to 14, 12. We've been trending in the lower 20s, which is usually a buying opportunity, generally speaking. Another non-conventional indicator that I want to show is looking at trends on Google Trends, as I have here. So one trend I want to point out today is there's a new high in Google searches for the term hyperinflation. This is important because it shows that people in the world are interested and concerned for all of the money being printed that is going on in the world. If those people are all searching to learn about hyperinflation, then Bitcoin has potential to get some traction because Bitcoin is supposed to act as a hedge against currency hyperinflation. Looking at Google Trends search for Bitcoin, as you might see, this is a past 5 years, just as this chart was past 5 years. You can see Bitcoin's top in December 2017 matched with the price of an index of 100 for search terms. If my mouse wants to get there. Yeah. Somewhere in there. But you can also see that Bitcoin's search volume accelerated from the low 20s, from 23 to 100 in the matter of a month. So once things pick up in Bitcoin and gain mainstream media attention, Bitcoin searches will pick up dramatically. Now let's take a closer look at the technical analysis side of Bitcoin, because that's all I have for fundamentals. The technical analysis side of Bitcoin, we do have a mess. Let's just zoom in so it looks a little bit better. The 1 hour chart. So my general Elliott wave count hasn't changed much since the last episode, but it has changed a little bit. With the help of Ryan Wilday's analysis, some wacky triangle pattern is in place. Let me remove the Bollinger Band so you can see my count easier. And I don't know why our internet is lagging as of right now. It's getting wacky. So that Roman numeral 1, 2 that I showed on that episode is still valid. It's just trying to figure out the kinks and the count for this, whatever the hell you'd call this. It'd be a gigantic triangle because we're just generally trending sideways. As you can see, this trend line I drew right here, we keep retesting this low right here and keep retesting it. It's just one giant triangle. But overall, I'm still bullish on Bitcoin, and these targets are subject to change with more price history. As you see, those wave 3, 4, and 5 to 11.7 to 10.4, and wave 3 to 86 to 8,000-ish area. Wave 4s usually are confusing, so that's why I don't really put a target box for it. That 5 waves up right there that I had on the last episode is still valid, pretty much. The only thing that's changed is instead of an ABC as a 2 looking for a third wave up, since it's just going sideways, I put a ABCDE triangle and just figuring out the small term counts. As you can see here, this little position box right here is a it's a little trade position that I've opened up in the last few hours while writing the script for this video, because I saw a clear descending triangle right here, triangle, with a flat bottom or near flat bottom and a descending top. And it makes me, combined with a larger triangle, makes me think that Bitcoin needs one small low, like an E. So I have a little box here. Before possibly skyrocketing upwards. So basically I saw this as a little opportunity open for a short-term trade, so I took it. I don't mind if I lose the trade and get stopped out and lose 3%, but if it does make that one more low, then I make a quick 7%. If it does go in 3 waves ABC for wave E down, then the wave A is usually equal to wave C's, so that's why I put the C there. That's what makes it equal. So that's where I have the trade stopped at, but the E can reach anywhere to probably retest this trend line right here. So that's why I put a box down to here and the fib line. So yeah, pretty much that is it for episode 23 of the Better Than Bitcoin podcast. So yeah, that's all for episode 23 of the Better Than Bitcoin podcast. Don't forget to like the video and subscribe. Follow me on Twitter at Jane Dabaskis, and peace out.